Hey everybody, I'm Surbhi and you are watching Key Differences. In this video, we are going to talk about the difference between saving and investment. So friends, what are we waiting for? Let's get started. In the simplest sense, saving is the remaining amount after deducting all the expenditure from income. When a person does not spend all that is earned on consumption, the money that is in excess is called savings. Suppose you have earned rupees 1000 and you have spent rupees 800 on shopping, then the remaining amount, that is rupees 200, will be your savings. So symbolically it can be expressed as S is equals to N minus C, where S represents savings, N stands for income or particularly disposable income, and C stands for consumption. Here, you should take a note that savings is a function of income. That is, if everything else is same, then increase in income may lead to the increase in savings. And that is why high income group sectors of an economy have greater marginal propensity to save. Moving ahead, there are a number of factors that affect savings of an individual, which may include level of income, consumption pattern, level of consumption, and rate of interest on savings. Coming to its definition, saving is the act of keeping aside the money in a secure place for future needs and emergencies, such as unforeseen future event. Further, if we save money that we earn, we generally want to make the cash available instantly. This means that, in general, a person saves money to access it anytime. However, financial returns on savings are comparatively lower than investment. Methods of saving includes saving money in FDs, PPF account or deposit account, certificate of deposit, etc., which have a very little risk factor. Moving on to investment. Investment is anything that you spend and expect a financial return afterwards. Investment is the process of using your funds in purchasing financial products that have the potential to generate good returns over a span of time. It involves buying of assets like shares and debentures, bonds, commodities like gold and silver, real estate, mutual funds. These are generally those assets that create value over time and can provide better returns in exchange for taking more risk. So here you should note that investment comes with risk. That is, with investment, the chances of losing money is relatively high. In fact, you could lose your principal amount invested. However, you also have the opportunity to earn at a very good rate. In this regard, you might have heard the statement, the greater the risk, the greater will be the return on investing. To avoid the risk, investors spread their money among various investment products in the expectation that even if one investment product does not perform well, the other product will make up for those losses by earning greater returns. This approach is usually known as diversification. But here you should keep in mind that diversification does not guarantee that your investment won't get affected in the case of market drop. Also, there is no such thing as a perfect investment like risk-free, tax-free, high-return investment. That is to say, all the investment products involve trade-off and some level of risk. Further, investments are volatile and illiquid. That is, you earn returns by selling your investments for a profit. Moreover, investment helps in creating wealth over time. Smart investors generally follow a consistent pattern to add new money to their investment over a long period of time. This helps them in accumulating wealth over time. People usually invest their money because of the reasons like achieving long-term financial goals like buying a house, car, etc., attaining financial independence, and have sufficient funds after retirement. Moving on to the difference between saving and investment. Meaning, saving represents that part of the person's income which is left over. That is, neither it is used for consumption nor it is spent on current expenditure. Investment, on the other hand, refers to the process of using funds in purchasing assets with a view to generate return over a period of time. Next, while saving is done with the aim of meeting short-term, unplanned expenses and also urgent cash requirements, investment is done with the aim of getting higher returns which helps in creation of wealth and capital appreciation over a period of time. Next, risk. As already discussed, people prefer saving over investment because they are secured and the element of risk is low. Whereas if you have not planned your investment wisely, when the market drops, there is always a risk that you could lose some or all your money that you have invested. Next, return. If a person has saved money in banks or financial institution, the return that you could earn could be low. On the other hand, in case of investment, return could be potentially high or low. This mainly depends on a number of factors like market situation, performance of investment, term of investment, etc. Time horizon. Because the return on saving is quite low, it is ideal for meeting short-term financial goals. However, to reach long-term financial goals, investment is more preferable option because it can generate higher returns in the long run. While saving provide a little protection against inflation, investment provide more protection against inflation. Next, when it comes to typical products, people park their excess money by keeping it in savings account, PPF account, FDs that is fixed deposit, CDs that is certificate of deposit, etc. In contrast, one can invest in mutual funds, bonds, stock, commodities, real estate, exchange traded funds, etc. So friends, this brings me to the end of this lesson. I hope the concepts has been clear now. However, if you want to study the topic further in detail, you can visit our official website, that is keydifferences.com. Here you can find a detailed comparison of saving and investment along with their definitions. Links are also provided in the description box below. I hope you liked this video, and if you did, please do give it a thumbs up and share it with other people. Also, if you are new to this channel and wanna get more such useful videos, consider subscribing this channel and also hit the notification bell next to the subscribe button so that you are notified every time a new video is uploaded on this channel. And if you have any queries or feedback for me, feel free to leave in the comment section below. Until next time, this is me Surbhi signing off.